Hi, I'm Justine Zavitz with Zavitz Insurance and Wealth, and today we've got Neil Greenbaum with us, who is from Nest Wealth. Now, as many of you know, over the past several years, we have started offering more and more advice around your financial retirement and estate plans, and just last year decided to rebrand ourselves so that it was more visual to our clients that we are Zavitz Insurance and Wealth. And we've always made it very clear when we describe ourselves in our wealth management that wealth management does not mean investment management. Wealth management to us means something very different. It means focusing on all of the pieces of your plan, of your wealth, whether that's your investments, your insurance, your estate plan, your retirement, your net worth, paying down debts, getting your kids through school, all of these pieces, the tax planning that comes with it, and bringing it all together in one big picture. Now, with that, many people tend to ask us, now, where do I go invest my money? And that was something that we didn't want to answer for our clients in the sense that we would be able to build you a portfolio. And so we started lining ourselves up with people like Nest Wealth and Neil Greenbaum. So Nest Wealth is a referral arrangement that we have that allows us to open investment accounts and tap into the portfolio managers and highly specialized and educated people on their end to build you the proper portfolio and provide the investment advice. So Neil, I want to pass it off to you. I've got some questions for you today to just explain a little bit about how we work together. And so to start with, I'd love you to introduce yourself and Nest Wealth.
Sure, absolutely. So just a little proviso before I begin. First of all, I think you'll notice the mustache. I am participating in Movember with my two boys. So we're raising money, very important cause. I think many of you know that. So just trying to do a little bit of my part there. The other thing you'll notice is I'm wearing my Nest Wealth shirt. So I'm trying to brand. So that's all good. But in terms of the relationship, Justine, I think you nailed it when you sort of said, you know, where do advisors focus their time, right? I think there's always this struggle with an advisor as to, you can do so many things, but do you have time to do so many things? And I think you nailed it in the sense that, you know, I think a lot of advisors are coming to the realization that there are experts. There are people who look at portfolio management 24/7. They have CFA designations. They're registered portfolio managers. They look at screens. They do all the research. I mean, it's just, they do all the trading. So it's, you know, I think a lot of advisors are realizing, is that where my value proposition is? Is that really where I want to focus my time? Why not, you know, sort of let the experts do what they do and let them sort of, you know, do all that type of stuff. But again, you can still participate. So you can get your clients to these highly, you know, successful managers and get them access, which typically, by the way, normally to access these managers, you probably need $1 million in assets to even start a conversation with a lot of these asset managers. But we do it for basically a fraction of the cost. So, so getting access to these types of solutions, and then, you know, also giving you access so you can help the client through. Now, I think you said something excellent as well in the sense that this is a referral, right? So, you know, you're using a referral-based relationship so that, again, you can get your clients access to these great products, very low cost, and again, still have eyesight so that you can focus on the plan, the estate, the insurance, like all those wonderful things, which again, most clients value more than the investments.
Mm-hmm.
I'm sure everyone wants a return. Everyone wants the best return, but I mean, you oftentimes have to take on a tremendous amount of risk to get there. And I would just say, you know, our performance has been very relative in the sense that, you know, when you look at long-term track records, we're right there. So the saving of the money and the ability to use this sort of digital wealth platform is resonating not only with advisors, but also clients. And I think that's sort of what we do. I think it's also important to note that we do give a client a better experience. I mean, again, if you really look at the old way, which is a client comes in and, you know, they probably have to spend, you know, 15, 20, half an hour filling out a stack of paper that's this high. I mean, those days are sort of old. And it is quite amazing when you think about the wealth business, because we haven't had to change in a long time. And if you look around, there's a lot of other industries that have, you know, taken technology and advanced technology in a way that's pretty powerful. If you look at how you consume media and how you consume music and all those wonderful things, it's really sort of unbelievable that the wealth industry hasn't moved, in a serious way towards technology, but that's changing. And that's where Nest Wealth comes in. And so we're really able to provide that sort of better client experience and again, give clients a better sort of, shake in terms of fees.
You know what I love about it too? Like I've got some of my own money is with Nest Wealth. And I just love that at any point in time, it could be, 6 a.m. that I wake up and think, oh my gosh, I forgot that I was going to throw this extra money over into my account. Or I'd love to know, I keep hearing the markets are just crashing and burning. I'd love to check in on my investments. And I have all of that power at my own hands, regardless of, not having to tap into my financial advisor to give me that answer. And it's a clear answer. You get on there, you can see it's in chart form, it's in numerical form, you can see exactly what's happening, where you started with your assets and where they've taken you. And again, you can make your deposits and withdrawals yourself extremely easily. So,
and that's a wonderful thing, Justine, in the sense that it does give a deeper connection to your money. That you get to visit your money more often, and you get a deeper connection with it, which I think is wonderful. That's what it's all about. But the other thing I think that I just wanted to mention was that, you can be anywhere in the world as well, right? Like, again, because this is all technology based, it's not about bricks and mortar anymore. It's not about, you have to go here and you have to go here and you have to sign, literally you could be anywhere in the world and visit your money. And so can the advisor be anywhere in the world and visit them and visit their book and help clients. So it is pretty amazing how fluid that is.
And it's so true. You're right. Like it's the stack of papers to sign. We're so beyond that, right?
Yeah.
Yeah. I think one big thing too, and this is something I learned from you when we first met, was that Nest Wealth is actually the first digital wealth platform in Canada, right?
Yes, correct. So 2 quick things, I guess. First of all, I probably should give you a little more detail about me. Not that you're super interested, but I just want to give you that sort of credibility that, listen, I've been in the business for 27 years. I've seen it all. I started very early on in my career working with a really great fund company called Dynamic Funds. Ended up spending 19 years there, which is pretty amazing because most people in sort of my world didn't spend that much time with one company, but really sort of work through all the different levels. I helped build an MGA, IROC, and MFDA firm with Dundee Wealth. And then, just spent some time at some other smaller shops, but, love the business. And I can tell you the reason for me to switch, because it is a switch, right? There's this old sort of more traditional investment world that exists. You hear about Bay Street and you hear about, the big office towers or the ivory office towers. And, that to some degree still exists. There is that sort of old culture, financial culture that exists on Bay Street. But I really wanted to sort of remove myself from that and go to a place where not only could I feel really altruistic and feel like I'm really doing the right thing for clients, but I'm also doing the right thing for advisors. And I think sometimes that dynamic gets skewed. And I think some people maybe think that the advisor sort of maybe wins more often than the client or and I think we've come to a solution now with Nest Wealth and with other digital wealth platforms that everybody wins. The advisor can really be strong and steadfast in what they're doing and that they're doing the right thing for clients and they're focusing the right energy and time in the right areas. And then I can feel justified and altruistic in that I'm helping advisors make sure the clients are getting the best solution. Mm-hmm. Because listen, I'm not here to knock. There's so many different products. And I know for a lot of insurance advisors specifically, seg funds was sort of the go-to, but that's not necessarily something that every client needs to have. And I think now there's an opportunity for insurance and all the advisors really just to make sure that the right product is getting in the right hands. And to me, that's the biggest win, and makes me really happy because again, it's a win-win. Clients win, advisors win, everybody wins. And so it's just a good theory. In terms of Nest Wealth, just to tell you, we are the first digital wealth platform in Canada. So we were very early. And one of the things that really, I guess, catapulted us in this space was the fact that we joined up with National Bank. So National Bank is a minority owner of Nest Wealth, which is important. It's important because I guess, you have the backing of a big six bank, which is wonderful. But I would say there's also a maturity that comes to this. And what I mean by that is, when you deal with a bank, you have to heighten your level of security, data, like every component of what you do has to be is scrutinized at a level that is really unparalleled than any other sort of company that may be out there that wants to use your product. So I just say that really elevated our company to a higher level because of that maturity and the fact that we had to demonstrate that type of capability. We have over 80 employees. So I know some people think, oh, this is fintech and it's small and there's two guys in a garage with a dog and they're sort of just playing around. And no, that's not
venture capitalists.
Yeah, that's not true. People, I'm telling you honestly, there are 80 people that work at the company from all different types of sales, marketing, customer experience, developers, designers. I mean, all of our technology is intellectual property that we have. That's ours, we really want to be that sort of preeminent toolkit for advisors. So to give you a sense, our vision of the future is really to help advisors work with clients and help them sort of plan using Razor Plan, because we do have a financial planning software that is part of the parcel or part of the kit that we give advisors. Yeah. So plan, and then we want people to save using Nest Wealth Plus, and then we want them to spend. So believe it or not, we actually want people to spend the money in their retirement. Listen, Justine's going to help you work on your estate and make sure that there's probably some left over for others. But it's also great to be able to know that you can spend your money comfortably, how much you can spend, and doing that in the most tax efficient way. So we're building sort of technology or a module around that. And that's sort of Nest Wealth in terms of where we came from and who we are.
Yeah, and I love it. And I love to, so Razor, I'm going to do my own little plug here because we started with Razor. That's actually how we got into it. And we absolutely love that software program. We use it for everything. And every time you guys enhance that program, we're just like clapping our hands over at the side. So love it. And I love your vision. And you're right. It is funny you talk about spending money in retirement. I think it's a mindset shift, right? Like people are like, no, I'm supposed to be like shoveling money in, not spending it. And I always say, like, I'm not going to put you on a budget. I'm just going to help you understand what you've got and what that means for you. In terms of what your overall goals are. And if that means you're going to run out of money when you're 80 years old, well, you can decide if you want to take that risk and be dead by then, or and then I can tell you how you might have to rein in those expectations. But I love Razor. Okay, right. The other thing I love is that you use the word digital wealth platform versus robo-advisor. Right. Most people think of them as robo-advisors. And even myself, I'm guilty of it all the time. I talk to my clients about, we have all these relationships with Nest Wealth, which is a robo-advisor. And so you guys have done a great job. You've written a book. There's a little ebook. I email it to anybody who has questions about what a robo-advisor actually is. And same with what is an ETF. You do a great job in this really short book. But I want to hear from you. What is a robo-advisor? What does that mean? You talk about these people who work there and all this value you bring, but then you throw in the like robo-advisor and everyone goes right back to their two guys in the garage.
Yeah, it's a shame actually, Justine, because listen, the whole robo-advisor thing was done very early on in the early days of sort of digital wealth. So believe it or not, there was a company called Betterment out of the United States that sort of coined, I think, this robo-advisor moniker. Personally, Justine, I hate it. It's the worst name that you could possibly give to this type of a service or what we've built and what we're giving advisors, because there are no robots. Okay. So this is all about a partnership between an advisor and the technology. So it's a hybrid sort of relationship. There's no one that is just, there's no robots that are indiscriminately sort of doing all these things without any human intervention. If you really think about it, again, I don't want to get into primates to how we became humans, but understand complex thought, right? Like the reality is that, it is very difficult to do all of those things in unison in terms of insurance, estate, investments, plan, like all the things, advice that you do is complex thought. And they don't have computers yet, and there's no AI that's figured all that out. So the only way to do it properly is to take advantage of the technology, but do it with an advisor who can look at all these different pieces of information and this complex thought and put it all together into a plan or into an action. So terrible name. And really what robo is, if I looked up the definition and I don't love it, but it says digital platforms that provide automated algorithm driven financial planning services with little to no human supervision. I mean, terrible. First of all,
Terrible.
Our platform has nothing to do with financial planning. We have a separate Razor plan that does that. Our Nest Wealth Plus platform is purely for investment accounts. And again, it's the advisor that needs to be involved in that financial planning process. So it really doesn't make there's no real, to me, connection around that. So what I would say is that, again, there's no robots. Every trade that we do at Nest Wealth is done by a human being who has a CFA designation. So he's a chartered financial analyst. He's got, he's been a portfolio manager for years. And they're the ones that are doing all of the portfolio construction, the trading, and all that rebalancing and stuff like that. And so the real benefit to me goes back to this whole idea of where do you spend the time, right? I think a lot of advisors have figured out that, they're not able to necessarily pick the best fund or the best, the best stock, or, it's really a practice or a discipline that's really done better by portfolio managers. And so the reality is a lot of advisors are coming to this sort of conclusion that it's probably better to sort of let technology help me where I really need the help. So I don't spend all the time on compliance and the paperwork and the rebalancing and sort of all those things. Let technology do that, which it should, right? That's what technology is for, is to take away the mundane, the non-value added stuff, and let technology do that for you. So you can focus on all the right, the right things. And that's, again, the advice, the planning, and all that stuff. So, yeah, I would say that's sort of that answer to robo. Yeah, the robo thing.
The worst terminology. I totally agree with you on that. I always explain it like, we use the technology, like you say, to define what your risk tolerance is, where your net worth is held even, like I said, a lot in real estate and you need more liquidity, that kind of stuff. And then it's the people on the background who have this selection of funds that they're now saying, okay, based on the answers this person has, we're going to take fund A, C, F, and H, and in these quantities or in these proportions to build this portfolio. And then if H is no longer the best product for H's marketplace, then that CFA is going to do a trade out to whatever is the best product. So again, all managed by people, like you say. That's the way I explain it, but it's an unfortunate term. Like, I think it was that people thought robots were really cool at the time, so they're going to change the world. So it kind of leads into it, and you talked a little bit about this as well, just with the relationship with National Bank and so on, but some of the misconceptions around robo-advisors, other than it's a bunch of robots.
Yeah, so we talked about the robots thing for sure. The other big one I get, there's a couple. One of the other big ones I get is your money isn't safe. And I really think this is important for us to delve into because, again, I think there's a lot of misconceptions here. So I would just say to you that all of these digital wealth platforms typically have to deal with what's called a custodian. And so there are many different custodians. But these custodians are fairly large. I would say almost as large as some of the banks. And basically this custodian is our record keeper. So they are the ones that sort of, set up the accounts. They make sure all the tax filings are done properly. They're basically our back office. And so there's many portfolio managers, many firms, IROC firms, MFT, that use a custodian to help them run their business. Because again, it's when you're a smaller company, to have a huge, massive operational team can be almost literally impossible, right? So you have to sort of leverage those services. But the good news is that they're professionals at what they do. So that's all they do. So they're experts, oftentimes much better than any internal operations department. They know what they're doing because they've been in business for a long time. But the key thing is they have what's called the Canadian Investor Protection Fund. So they are subscribers to the CIPF, Canadian Investor Protection Fund. So all your accounts are safe up to $1 million. They're basically guaranteed by the government up to $1 million. So basically, not that Nest Wealth would ever fail, but let's make this hyperbole assumption that NestWealth failed. Your money is absolutely safe because, again, it's not held with NestWealth. It's held with our custodian, Fidelity Clearing Canada. I'm sure many of you have heard of Fidelity. It's probably one of the biggest financial institutions in the world. So your money is safe. There's no risk. There's no, I would say it's as safe as any other, IROC broker you or MFD advisor you invest with, or any do-it-yourself investment type of program. I mean, there's no difference. So
well, I was just going to say a lot of other like human being wealth managers or investment managers would use the same Fidelity Clearinghouse as their custodian. Right?
Absolutely.
So it's got the same protections as anyone else who would work with in the investment industry.
Right.
Yeah.
So another big myth, Justine, is this whole idea that this is a millennial solution or small account solution. And that one really bugs me. And it's not because I'm Mr. Greedy and I want big money, because that's not the case. We have no minimums. We're happy to help anyone invest and do the right thing and take advantage of our platform. I just don't like the fact that, again, that we've been branded as something that we're not. So I would say to you that it's just not true. Yes, millennials want a digital experience, and they can get that now through us or through a variety of different digital wealth managers. But the reality is that it's really the people who have money that are looking for the best sort of opportunity or deal in terms of, what they pay and how they can maximize their retirement, in terms of as it relates to the fees that they pay. Mm-hmm. So I would just say to you, our average client is 47 years old with 170K in assets. That is far from a millennial, okay? And so that's one thing. And then small accounts, again, we can help anyone, but obviously, the larger accounts, a lot of times they're more attractive. So one of the things that NestWealth does, and we haven't mentioned this, but I think it's worthy to mention because, I think it clarifies my point, and that is that we cap our management fees. There is no manager, I don't think, in North America that basically cuts off their revenue and says, you know what? No, we're going to charge our management fees up to a certain point, and then we're not going to charge any more. That is really unheard of. Yeah. I'm sure many of you who are listening today realize that you are being charged on your assets under management. So whatever that AUM is that you have, whatever your assets are, they're charging you a fee on that entire amount. We don't do that. We sort of say, listen, up to a certain amount, we're going to charge you, but then the rest of it, it's free. Like there's a maximum or a cap as to how much we are going to charge you. And I think that's the big reason why we are attracting a lot of higher net worth individuals, is because they're not just saving $100, $1,000, they're saving tens of thousands of dollars and getting similar relative performance. So the question really becomes, why am I spending all this money per se on this, when I can get similar performance and spend a fraction of that amount, right? And that's sort of what's happening in terms of this understanding or sort of, reality around, the situation. And then the other thing I would just say is the only other, I guess, misconception or myth is this whole idea that, this is a fad. Like for some, I think everyone, sort of looks at technology, back in the 2000s when they looked at all these companies and thought, this is just a craze, forget about it. Mind you, all of them have stayed true and done very well. I don't think this is any different. I think this is a high level trend that is happening and that is we're at the tip of the iceberg. And this trend just, is movement of money from mutual funds to ETFs, right? Which I think we're going to talk about because I don't think we've gotten into that, but we will. So this is that massive trend of moving from mutual funds to ETFs. And I would say, sort of traditional to digital, so that those are sort of major, I would say, trends that are happening in the space.
I would even argue, like with COVID, it's probably made this even more apparent, right? Because even insurance companies on our end have never welcomed DocuSign or created automated like electronic applications and so on until all of a sudden it was like, no, you can't be sending paper out to all these people, and we can't get witnesses from everybody, and so that trend is only solidifying and cementing
Yeah.
with what COVID has done. And same with the whole ivory towers on Bay Street. I don't think anyone wants to work in there right now.
Yeah, no, they're empty, for sure.
Yeah, yeah. So yeah, but it's perfect segue because you're talking about like this trend of mutual funds to ETF, and so what Nest Wealth uses in building their portfolios are ETFs. And so for anyone who doesn't know, I'd love just a description on what is an ETF, what are the benefits, what do the naysayers have to
Sure.
say?
So an ETF is called an exchange traded fund. Okay, so ETF stands for exchange traded fund, and that's essentially what it is. So I'm going to give you a sense of how it is similar to a mutual fund and different. So one of the big differences to let's say a standard mutual fund is the fact that, these are securities. So they are actually, although they hold a bundle of stocks within it, the index, it is still a sort of single CUSIP number. It's a trade. It's actually a listed single security on an exchange. Okay, so that's what an ETF is. Whereas a mutual fund is sort of has a daily sort of NAV, but that's done at the end of the day. So it's sort of calculated at the end of day based on the assets that are underneath. So that's a big differentiator. And listen, there are so many different ETFs, just like there are so many mutual funds. And all of these assets, and so there's a lot of similarities there in terms of the breadth of options that are available. But I would also say in terms of the risk, sort of the risk reward, because listen, you can find a mutual fund that's very risky. Same thing with a ETF that's extremely risky. There are some ETFs that literally are so specific, like there's a marijuana ETF, so that's all it buys, or there's a robot ETF, so that's all they do is robotics, right? And obviously that comes with a tremendous amount of risk when you're just investing in one very specific discipline. We don't do that. Our ETFs that we buy are very large, from the largest sort of industry players like Vanguard, BlackRock. I'm sure you've heard those names before. And we're buying sort of passive ETFs in the sense that, we're basically looking for index hugging ETFs, so that, when you value a stock, there's a thing called a bid and an ask price, because you can bid a certain amount or you can ask for a certain price and see if someone's willing to match your order. But there's no spread on that. Basically, the valuation of the ETF is very consistent. And again, these are very large caps, so there includes hundreds of positions, which is similar to mutual funds, because again, mutual funds do have a basket of securities or a basket of individual stocks. Same with an ETF, except the valuations obviously are different. And I would say, there's a little bit on commissions. So, when you're trading on an exchange, there's commissions. So, that can somewhat be a cost, but there's also costs that are embedded in the mutual fund management, MERs and management fees that, for all the trading and stuff. So it's a bit of a wash there. So really it just becomes down to a much lower cost investment vehicle, really. Because again, there's a lot of similarities. And that's the benefit of ETFs, hugely diversified. They're just, there's great, liquidity. So again, we can get in and out of our positions very quick. And the big, I'd say, misnomer, or where there's, this whole idea of the naysayers, is that, there's a whole bunch of people who promote the fact that, this is all like, huge data, and, somehow it's just the whole system's going to combust. I completely disagree with that. To me, those are the conspiracy theory type individuals who say, all this algorithmic trading is just going to somehow blow up the system. I disagree. And then the other sort of naysayer would be that, there are so many different, as I said, ETFs that are out there. And I think some ETFs can be very dangerous. And I think that's where this conception is going, because you've probably heard, Justine, about these double bears, double bulls, where basically they're using leverage and a whole bunch of other, derivative type of strategies within an ETF. And that can be hugely dangerous. There's no question. Those can be catastrophic to your wealth if you're using them and you don't know what you're doing, right? So we don't do that. All of our ETFs don't have any derivatives. There's none of that sort of, that type of sort of liquid alternative type approach, right? Or alternative type of investing that's built into our ETFs. They're plain Jane, simple, index hugging, large cap ETFs.
And like when you say index hugging, just for all those who are like watching, it's really, I always go very, very general. I know you said there's this huge breadth, but if we go extremely general and say, what's the Canadian bond market doing? It's doing this, and you have an index hugging Canadian bond market ETF, and this is what it's doing as well. It's really just built based on the bundle that would make up that specific index, and it just follows it. There's no attempt to try to overfund in this area where your instincts or your research team has told you that they're going to do better than the index, and then underfunding in this one where they're going to do worse. That's more of the active management approach. But that's what you mean by index hugging. So, or at least that's my extremely simplistic way of explaining it.
No, and I think you said that well, right? Because we don't make any market calls, right? And again, I would just say it goes back to this sort of active passive, right? It's not to say one's better. It's just, passive just doesn't bring any of that market sentiment or that, making a call on sectors, or, you're just buying a basket of securities that represent, like, for example, the United States. So, we always have an ETF that is specific US ETF that we help to build our portfolios. And that's because it's the largest market. It's not because we like the US more than we like another country. It's just the US has the largest market with the most breadth, the most depth, the most sectors. And so it is the best example of an index of, so that you can be as broadly diversified as possible, right? Let's look at Canada. Canada is essentially financials, energy, resources. That is not essentially a diversified market. You need healthcare, you need tech, you need 101 other sectors that are not represented really in the Canadian index. And that's why it's a lower weight, right? So we're trying to maximize and again, build the most diversified portfolio using basically countries, sectors, every geography, types of everything, right? So, and that's how we do it.
No, that's amazing. And even like we touched on this, we haven't touched on it in here yet, but just in our past conversations, even about the fact that Nest Wealth has access to an active portfolio manager will in the coming months. That, if any client is looking for active management or wants to check that out, then there's actually access through Nest Wealth, through your own kind of referral arrangements there to provide that access and ability for clients.
Absolutely, yeah. Because again, there's no just one way to invest, right? Passive is a wonderful way, again, to really, save cost, get similar access and similar returns, again, for sort of a way lower cost structure. So that's great. But listen, there are some great active managers that for example, we partnered with a company called Four Strong Global, fantastic active ETF managers. So they still use ETFs as the core of their strategy, but they are using, again, they're doing an active overlay. So they're picking which sectors and again, adding their acumen with a bench of portfolio managers that have great track records, great knowledge, great experience, and they're actively, sort of, again, selecting which ETFs to overweight, underweight, and so on and so forth. So, and again, that can be a good strategy as well, right? So there's no one strategy. Yeah, there's no one strategy, right?
And this is part of having the human in this relationship.
Exactly.
And because I know you can go direct to a lot of these digital wealth platforms, and you don't need to work with an advisor on any of it. But to that, and probably our last question that I'll put forward to you is, what's the value? Why do you work with an advisor in conjunction with your platform versus just trying to go it alone? And I think we've talked a lot about it in past questions, but just bring it home for us.
Yeah, listen, first of all, I would say we recognize, Justine, that value, right, that an advisor provides. And I think it really permeates our entire strategy. Hence the reason why we have financial planning. Hence we're giving you a digital wealth toolkit, because we know how that can be hugely valuable. And so, I think the key thing here is that, again, we want to get advisors focused in the right area. Okay. There are certain areas that just don't add value that I think we're sort of misconstrued as a value proposition, maybe by advisors, that is no longer true. And it's not about the compliance. It's not about the paperwork. It's not even, I would say, necessarily about the investments. There's enough product vehicles out there that you can let the experts do what they do, so you can focus, the advisor can focus on the relationship, the advice, the estate, the insurance, the tax, and all those things that, again, are sort of highly complex in terms of what you do. So and that's what we want. We want advisors to really help clients optimize their wealth, protect their family estate, minimize tax, do all those wonderful things, right? And I think that's what our portfolio is all about, is sort of managing not only the advisor and the relationship, but also the assets, so that we can do that part of it, and it can free up all the time and effort that you can spend with clients and doing sort of all those good things.
Well, and there's a lot of actual, and this is part of the reason that we decided to structure ourselves in this way. You talk a lot about you don't want to be in this type of ETF or that type of, like, you're very, vanilla style ETF, if you want to call them that. And that, this is something that as advisors in our office, we don't want to be spending that time researching all these things.
Exactly.
I always say I'm in insurance, and that's because I like protecting people's risk. And so if you ask me to protect your risk and then go risky on this strategy in your investments, I'm going to struggle with that flip. And so it's best for me to just leave it with the professionals and with the specialists in that area, and we'll handle the insurance side because that's where we specialize, but also wrapping it into the greater financial picture of that plan. And there's been a lot of research done just about the value of that advice, and how much further it can get you in your retirement plan, in your estate plan, in your tax planning, and so on. Even if it costs you an extra, point or two in fees, which is not even that much with when you're using a digital wealth platform in conjunction with an advisor, but usually that's offset by the value that they bring to the table, and keeping more dollars in your pocket and getting you to where you need to go. So I gotta say thank you. This has been awesome. I love talking to you. You're so passionate. It's very apparent, and I love it. And I love it so much. But I think it's really helped to provide a lot of education to both myself. I always learn something new from you, and our clients, and anyone who's looking into these types of platforms or just financial advice in general. Is there anything you want to add as your last send off?
No, again, this is something that is going to continue to grow and develop and sort of change. Nestwell's at the cusp, or the leadership of this sort of whole digital wealth movement. And so I think we're best positioned to help advisors and clients really, I would say, retire richer and, really take back control of the whole sort of wealth equation. So yeah, this is amazing. Yeah. Thank you. And thank you for giving me the forum to have the discussion, because we got to educate, we got to keep in front of it, and help clients really understand what the value is to using these types of solutions, for sure.
No, I'm so glad we could do this. And for anyone who hasn't watched any past videos that we've done, these are all on our website, etfsinsurance.com. Follow us on our socials. We're on Instagram, Facebook, and LinkedIn, and these are all getting posted on all of them. And feel free to reach out anytime if you have any questions. Thanks again, Neil. It was awesome talking with you.
Thank you.